The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. I hope everybody is doing well today. This is Brian Caprice from Keep Trading Simple, and welcome to today's current market analysis and identifying potential opportunities. So, kind of an interesting day today that it's actually a day, and you guys know that I love news. It's a day that we actually have no news going on today. So it's kind of one of those strange days, right? But are the markets moving? Yeah, we're seeing things pop all over the place. We see some gold popping. We see some dollar-yen movement, which we don't see as much. The euro's kind of up there. Crude's having a kind of a funky day, a little back and forth, kind of have some W shape. So definitely for a day with no news, yes, we got some movement. As well as every single day that passes, we are one day closer to the elections. Again, obviously the elections, is that going to be a market mover? Absolutely. With all kinds of new monetary policy or potential new monetary policy. I guess there's recently been some tax information, or I guess some tax plan information that has been pushed out there. And all these things obviously have varying degrees of, I guess, change, for lack of a better word, inside of the markets. And again, that gives us some potential opportunity. So with that said, let's just jump into things today. If you guys have questions, go ahead and type them in chat. I will do my best to see that kind of blinking icon. I have that off on another screen. And, I'll do my best to answer those as I can. If not, I can, my associate over at Nadex can give you guys a hand with it. First things first, for those of you that are new in the channel, again, I'll give you guys quick the 30-second elevator speech here real quick. Basically, I'm a price action trader. I've been trading since about 2000. So I've seen ups, downs, lefts, rights, sideways, regulation, deregulation, pretty much anything financial term-wise, I've kind of experienced it as a trader. I am not a 12th generation trader out there. My dad was not. My dad was actually, he worked for IBM. So trading, I was like really the first one that got into trading. Loved it, always been drawn towards it. Learned the traditional methods, got into this as a retail trader, learning stocks and options, learning kind of what not to do, found foreign currencies and fell in love with that market, understood futures, became a financial advisor because I wanted to kind of take my game to the next level. And I figured if I was working for one of those big three companies, I could get a look into the market that people on the outside can't see, and realized very, very fast that they didn't really know as much as what I thought or I assumed that they knew. But I did learn about bonds, which is something that I had no knowledge of or really no experience with before that, which really kind of furthered my game and brought me into kind of new levels. And started traveling around teaching people how to trade the markets. Left that industry. I realized that I wanted to help people on an individual basis. And that's really kind of why I do these presentations. I want everybody to kind of leave today's presentation with some type of aha moment, some type of golden nugget, something that you could take out of this and, again, further your trading game in the markets. First and foremost, actually, I'm a family man. I pride myself on my family is my most important thing to me at all times. If I sound a little bit hoarse or my voice goes in and out, it's not a technical problem. It's a hardware problem, but with my throat. The boys had a tournament this weekend on Sunday, and again, when you coach, your voice tends to get stressed a little bit. 10-year-olds don't always listen, and when they're across the field, yeah. So I apologize, if my voice goes in and out. But again, you guys, if you have questions, just go ahead and ask them at any time. Before we begin, let's cover the Nadex risk disclaimer that trading on Nadex involves risk and may not be appropriate for all investors. Trading can be volatile, and investors risk losing the cost to enter the transaction, including fees. The information presented within this presentation is for informational education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility and at your own risk. Past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Nadex is a registered trademark of the IG Group. So what we're going to cover today is we're going to go into this week's upcoming news events. Obviously, as I mentioned, today is not one of those big days, but the rest of the week does offer us some increased opportunity. Now, the website that I normally use is actually, I don't know if it's under a DDoS attack or not, so I have the pleasure today of going through Daily Effects and showing you the economic calendars over there. It is a secondary site that I use as well, and again, if you're unfamiliar with where to find these things, Daily Effects actually has a lot of additional tools that Forex Factory doesn't have. It just, again, it's old habit for me to kind of go to one. But we're going to show you the other one today. And again, kind of if you're not using the economic calendar, it's definitely something that I would use an economic calendar, regardless, to make sure that your trading is being done at the proper and correct times. Then what we'll do is we'll go over and break down the indices, and then we'll cover Forex, and we will cover commodity futures as well. Or not commodity futures, but commodity charts as well. And again, everything we're talking about today is kind of my personal assessment. I try to keep it as simple as possible. You won't see a whole lot of indicators and things all over the place. You're going to see a bunch of boxes. For those of you that knew, I did mention I am a supply and demand or a price action trader. Those are kind of the two strategies that I combine and use together. And again, I'm looking for previous areas of supply and demand to be able to trade those. So knowing where those are and then matching that with news, that's why I'm such a big person covering the economic news calendar. So with that said, let me pull that in. It's going to look a little bit different, right? Looks a little bit different than our buddies over at Forex Factory, right? It's actually much more of a mobile-based site. So if you guys see these big pop-ups, it's because it's more mobile-based, right? So going into really, let's go into today, right? This is what we had. And when I said there's really nothing, none of these are big kind of earth-shattering moves. Like building permits, not really moving the market. Quarles doesn't move too much. Evans isn't really a big mover. Westpac leading index, nothing really big today. So nothing here. Again, even though they're considered medium of importance, right? The way you find importance here is clicking it. And again, they do a great job of explaining the highs and the lows, right? Not too much today, right? Now going to tomorrow. Tomorrow does have a little bit more information that I would say is noteworthy. First being, again, the UK tomorrow morning, we start talking about inflation. Now, the previous was a 0.9. The forecast is 0.3, showing we have an increase in inflation. You may say, well, hey, listen, Brian, I don't really trade the UK. I mean, why is that important? Anytime we see an inflation rate coming in, okay, that goes directly over into the gold market. Okay, you may not trade the gold market, but it's important to understand what the gold market is doing because gold is kind of one of those things that is has kind of an overreaching philosophy, right? When we see high rates of inflation, particularly in other countries as well, that does spill over into the United States. And again, people think, oh, inflation is coming. Is our economy running too hot? Are they going to raise interest rates? There's a lot of things that kind of are intertwined there. Okay, so again, you may not trade the UK. You may have no idea how to actually trade it. But seeing things like this, right? Right around the European Open time, the European Open is probably one of the best times to trade, more so than I would even say the New York Open. News like this of high importance, things like inflation, that could really set off the entire morning kind of trends, right? And then you can see we have a couple other things. ECB president is speaking, and then we're good. So really the UK Open, right, the London Open, potential fireworks tomorrow. Then we have some core inflation data and yearly inflation for Canada at 8:30. Again, after that, it kind of dwindles out. And I would say that Canadian inflation is not as big of a mover as, say, like the UK. And again, it's because of the timing of that release. But again, it can still have some movement. And, I would say while it's not as big of a trader, it can be, provide some movement. Besides that, really tomorrow morning at 10:30 is where we're going to see the oil inventory reports. Last week, it was funny. I actually misquoted, and I want to make sure that I point this out. I don't know why I had it written down wrong. Last week, the oil inventory report was actually on Thursday, not Wednesday. The trade setup that we talked about on Tuesday worked to literally the penny. We just missed it by a day based off of where the news was. So it was kind of weird. The market reacted like it was on Wednesday. It was actually on Thursday. So again, my apologies for messing up my days on that one, but this week it is going to be on Wednesday. Besides that, nothing else. Page books sometimes to move things. Going into, let's go into, where are we at here? Over here on the 22nd. All right, 22nd is Wednesday. Hold on, I'm sorry. 22nd is Thursday. You can see that, again, we have some German data. Now, German consumer confidence data, if any of you guys are foreign currency traders, you may say, well, why does Germany's data matter? And Germany is the leading industrial powerhouse of the European Union. Okay, so when you see things like consumer confidence, right? The money that people are spending is getting worse. That isn't typically a good thing for the euro, right? In general, and the euro is the most traded. The euro dollar is the most commonly traded asset in the entire world. Okay, seeing that consumer confidence go down in their leading, kind of driving country, not normally a good thing. So we could see some movements in the euro dollar there. Besides that, we go back into inflation down here, and again, you guys know what inflation has to deal with. And then obviously Germany, we got some information as well later on the week. Going into Friday. Friday is really kind of the bang bang day, right? Early morning, it's going to be all those retail sales numbers, the composite manufacturing PMIs, the services PMIs, all morning back and forth. So there should be some fireworks early morning. We'll see what the trend looks like, and then that's kind of capped off at 8:30, or I guess 9:45 listed here. I have it right here, yeah, 9:45. We have the U.S. manufacturing PMI flash data, right? So you don't have to know what this is. You don't have to be an economist or a market kind of major in college. But just understand, whenever you click on these things, if you're not sure what it is, you can kind of click in it, and it talks about what this means and the purchasing managers. And what's most important, typically with these manufacturing and services PMI numbers, is this last piece right here. And again, Forex, Forex Factory, you click on it, the folder, it gives you the same type of drop down. Basically, 50 is the magic number, right? Below 50 means economic, kind of contraction. Above is expansion, right? We are above. The forecast is expected to be above, and this can be swirled, but a surprise data number on this one, like say this comes in at like 51, right? You could say, well, that's still expansion. Yeah, it is expansion, but if it's not expanding at the same rate, that is overly negative for the economy, okay? If the market is prepared to see this PMI number being, 53, and that's, a little bit higher than what it was, and it only comes in at 51, although it's not showing contraction, it makes people start to wonder, and that can turn the entire day in kind of a negative day as the market readjusts. So just kind of be cautious about that one, going into Friday, and again, that, coincides with Europe as well. So now that kind of brings us through the rest of the week. I wouldn't say that this is one of those weeks, and I always like to do this, going into it, give me the full, 7 days, right, with high, and how much is up here. And it's kind of like each day there's one or two things, and in consumer confidence, a lot of inflation data this week, business climate next week on the 26th. The 26th is actually next Monday, and again, that'll be before us. So I wouldn't say this is one of those weeks. It's kind of chock full of news. All right, so a lot of the same type of stuff, inflation. So watch gold. Gold will be on the movement and on the move. And then Friday we got a lot of the manufacturing PMI data with services and manufacturing. So that's about it. Not really tons there. Going across, let's go ahead and start pulling some charts now. Let's pull this up. Let's pull this. Let me refresh it real quick and go back down to a lower level. So we're sitting, let me bring this back up to like an hourly. Makes it a little bit easier, right? So we're sitting here right now, okay? Last week would have been the, 13th? All right, let me double check that one. Yeah, last week was the 13th at 12, right? So that brings us back to the 13th at about, right here? Where do we, it should be 12, right? Yeah, right here, okay? So we had drawn this curve level, mentioning that, hey, listen, we're pretty high up on the curve, right? We'd mentioned that we had a sell area up here at 12,203, okay? Since last week, we've done nothing but bang off this level and continuing to push to the complete opposite end of the curve, okay? Now, again, remember, for those of you that are new, and again, this may be your gold nugget for the day, what the curve is kind of our bias for the week, okay? We use a higher time frame for the curve, and it's not anything that we're triggering off of the curve, but we're just saying, hey, listen, if we're in the top 33%, let me move this out of the way now, I can move this to the side. When we're in the top 33%, we're saying, and our belief is that it's more than likely to, we more than likely want to take a bearish type position. And as you can see through the week, we did nothing but come down. We bounced off this kind of middle section and have now pushed to the lower side. So it's kind of setting up more now to where we need to change our thinking around and say, hey, listen, where are there, potential entries to get into this position? And we do have to drop down a lower, lower curve, lower areas. So right now what we're doing is you can see that this morning we pushed all the way back down over the last week. We pushed down to low on the curve. And there's actually a morning kind of entry right here. You guys can see that this one kicked in. And we ended up banging off this level at about 11 o'clock, right? I mean, the first hit was about 9:30 this morning, right? Off the open, we bounced up, came back down again, and about, 10:30, 11 o'clock, we got that little reversal pattern. So, where we are now on kind of a daily basis and where are there good trading opportunities, right? This is something I had for a short-term position. I would have to say, while this is our kind of main focus right now, right? This is the larger time frame. I would say there's probably decent selling potential. Let's delete this yesterday. Probably at either of these levels, right? Right now, again, you're seeing that we're kind of bouncing off this lower section. I have to say, for the rest of today, I mean, we're going to run into some sellers kind of here and here, and a few little levels to chunk up. But I would say if we can continue to push higher and put some some basing in here, there could be potential to push this one higher. What I'm going to do is I'm going to set some alerts later on this week. I don't know if we'll get there today. Right now, I think it will have a little bit more of a difficult time. But if we're able to push up into this 11,918 and this 1200 range, it's showing me before that sellers had stepped into this market. And if you're looking for the most powerful moves, and when I mean powerful moves, what I'm talking about is large extended body candles. Not this. This is not powerful. This is just grinding, right? This is a powerful move. And again, on the 15 minutes, decent. On this, powerful move. And again, on the 30-minute, again, strong movement, strong movement, strong movement. That's kind of what I'm looking for. Those are coming in up here into this one, the 11,918 and the 12,05 range. And again, this one you got to adjust it a little bit. I did the 1200 is strong, the 15 minute, not the 30, but you can see the 30. It's giving us a nice base there. Bottom side, again, where we're looking to take these bounces off of, there's not as many things to the downside. All right, so again, I'm going to bring this back up to an hourly. You can see that while this is a great takeoff point, it did kind of bounce around and kind of take its time before it finally launched. So, down here, and again, you can see that 11,618 was a level that we talked about being as a potential problem area, and you can see that's exactly what we bounced off of, that same kind of level right there. We missed it by just a little bit. I would say that the bottom lacks the same type of conviction that we had on the top side, right? This is very clear. Boom, just dropped. This is kind of basing and kind of, yeah, we went off, right? Not bad. That's kind of a retest of, these levels in here. And again, was there an explosive move off? Not tons. Okay, the first really explosive move I would say is probably down in this level here, 11,248. The reason why is, look at this. This is a very strong move right down. It stabilized and then ground its way back. Again, this parabolic retracement move. So, unfortunately, in this one, little bit harder to find an entry in right now. Okay, like I said, we are in an area where we should be looking for buyers. There has been some early morning bounces in here, things we could have taken this off of. Right now, this one's going to be a little bit trickier. And like I said, a lot of this is going to depend on time. I would say if you guys are looking for maybe something into the end of the day, maybe it's hard because it's already at noon, right? Noon Eastern Standard Time. So we only got a few hours left. Okay, this is a 15-minute chart. If we can manage in the next 45 minutes to kind of put any type of rally in here, I do feel like the way that this candle based here and hammered through and then got tested here and tested here, excuse me, I do feel that there may be an opportunity here at 11,753. Okay, is this worthy of a 2-hour binary late into the day? I don't know. Okay, if this was early morning and we were looking at the open right now, I'd be all over a position like this. If this was the open, this was 9:30 a.m. and we were rallying up, or maybe even 8:30 rallying in, I would love this position. I'd love the way this candle is drawn here. I love the fact that it's been tested. I think it would be a great reversal pattern, right? I would love this for a 10 o'clock reversal in the morning. Can we get a 1, 2 o'clock reversal? Yeah, sure, we absolutely can. Is it as high a probability as a 10 o'clock reversal? No, but it is something that we could take. And again, what I'm thinking right now is this is probably the curve that we're working with. I don't know that this level will hold. It did give us the bounce, right? It did hit. It did punch higher, and then did give us that kind of Harry Potter-ish kind of confirmation entry in, right? It did give us that kind of bounce there, right? I'll delete this so you guys can see the actual pattern below it. So again, it did give us that confirmation entry. What I would do is probably wait for a similar type of confirmation. I mean, here's the 5, right? You guys can see when we come down, I'll put the higher time frame overlay on there, right? Here's the hit. There's the stabilization. There's the pullback, and then boom, it rallied higher. Okay, so it gave it to us, not off the best of levels, right? But again, if we can get that same pattern up here, 11,753, I think we could be, I'd be willing to take something off of it as well. Just be cautious, and again, use low risk entries into this one, or low cost entries, because being later in the day, we can get that end of the day rally. We could end up punching through again. So you want to make sure you keep low risk on the NQ. S&P, again, you can see that same scenario. Here's where we are right now. On the 13th, we were sitting right here. Again, there's your curve. We went from high on the curve to low. Unfortunately, this one did not get as many pullbacks as we had liked. So we were sitting right here last week. Okay, we took a little bounce up, but I will say we had drawn this level not as a level we were interested in taking, but as a collapse. I already talked to my guys about this one, but here you go. What do we have here? It broke the level that we had marked off, right? It had been pushed deep and pushed deep. We were sitting right here, right? What did it do? It came through, it stabilized and based, it pulled back to the level, and again, what is this called? That's a Harry Potter. Using a prior level that was forced in, 1, 2, number 3 broke, it pushed through, it based, it pulled back, used that level as risk, and ended up collapsing out of that level. That level's actually worked a few different times since that time. So what do we do with this now? That. So my thinking on this one right now is, again, there is a 4-hour level sitting down here, right? Okay. None of the levels over here, I would say, are a substantial kind of takeoff points. Things that I'd be like, man, I love that. That looks great, right? I will say I do like this level up here. Okay, the same level we were talking about before. This had a decent push up and a nice kind of collapse, right? 2 hours straight down, no pullbacks, almost no wicks. It pulled at that same level, tagged it, and dropped again. So I think on your radar right now, you need to keep around 3503. I do think that there's probably one more short available in that level. Right now, we're kind of just chopping back and forth on the hourly. Again, I don't think we can get up to there the rest of today. This could be more of a, maybe tomorrow, maybe even a Thursday type position. But I do think we need to keep that on our radar as far as where a potential short would be. Again, it's got some room to run. This one is one of those ones late in the week we could pair with either a 2-hour binary if we can time it to, a U.S. Open, U.S. Market Open, or any type of speeches or, unfortunately there's not a lot of releases, but maybe even Friday, if we can get a kind of a rally up and be there on Friday, that'd be an area I'd be willing to take this. And again, the way that I would trade this when we approach that level, if we are there at either 10 o'clock or at a U.S. Open or something, I think my personal, and again, this is me, I'm not telling you this in your accounts, I would go down and look at the 2-hour binaries. I think there is some probably some decent potential in this on a 2-hour binary. If early in the week, I tend to lean more towards knockouts, news releases, early morning stuff, I tend to lean more towards 2-hour binaries. But that's what I'd be looking for. As far as where your buys come in, really the first clean buy is really, would be down here, right? So we got some room for this one to run to the downside. Again, with this chop sideways, again, near term, this is our short time frame, curve right here. Again, we're at the bottom. We may be able to get something a bit higher back up to that 35, but if we can get to 35.03, I'm looking the short. And once this level breaks here, I'm looking for a 35.56. All right, Dow. So here's the position. Again, I draw this for my guys. I said, hey, look, I'm looking for kind of a pullback. And again, bit of a pullback, drop, boom. Obviously, it collapsed much, much faster than we thought. It did give us another entry and then complete again this morning. Again, it was off of another Harry Potter position. And again, we were marking off this level here. Basic. Boom, base, boom, base, boom, base, boom. Explosion off. Tagged it here, came down, broke it. Came back up, used it as risk, confirmed it, and then took it again. Again, this is that Harry Potter trade every day of the week, guys. Where we were last week, let's make sure I can give this one. We were here, back on the 13th. We were sitting right here. Okay. Now, we had sells up there, and I mentioned to you guys, if we could get up to 28,885, I'd be all over that, right? Unfortunately, we got to approximately here and got turned away. And then we came back up again and got front run again on that same position. So you guys couldn't see this one last week. That was for my guys. Not much we could do. We had mentioned on buying side on the bottom, the 28,112. Again, this is a pullback and a nice explosion out that had been untested and ended up bouncing off that level and coming all the way back up again. So had different kinds of opportunity in here. This Harry Potter trade, you guys would not have seen it, but it was the same type of setup that we've been mentioning. Level of basing, explosion off, middle of the curve, right? The curve is here to here. Let's change this. Rectangle, turn it blue. Right there. All right. So here would have been our curve level that we established last week. Remember, we're looking for sells here, buys here. As you guys can see, every time it got up in this top 33%, I'm going to draw a line here, right? Here's our sell zone. Sell, 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 sell. Baseline. Okay. Bottom side. Buy here, buy here, buy here. It's not punching back up. So we're back in kind of the no man's land. So what I do with this now, I think it's very important. If we guys, again, we've already taken kind of 2 trades off this level. If we can get another bounce off of here, I think there's probably maybe one more, but kind of the same way that we have this one drawn, right? Looking for bounces either way. I think it's important to kind of look at this. Could there be another Harry Potter position for a breakout to the top side? Yes. Yes. We've already used this twice to the downside. I think you got to be looking for this on your radar. Okay. Vice versa, could we take another bounce off the bottom side? I'd have to say probably yeah. I mean, I ultimately I'd love to see this type of a confirmation, maybe a push into there like this, right? But I think at this point, I would really like to see this come up in base in this level, and that would reset this on both sides for me. And then when we punched out the top, look for a base pullback, go long, continuation pattern, or if we go up into that level we base, we punch lower, look for a pullback. Okay, and either of those two scenarios, you can see that this one has been really Harry Potter in both directions. And again, that level of area of interest has been pretty decent the last couple of days. I think that's the best way to play this. But again, I think this area of curve is holding firm. Again, this 28,196 to the downside, again, has been holding firm. Top side, you can either use the 28,885, or you can kind of simplify this one. And again, this is a test here, coming in at 28,770. I think either of those are good for the indices. Okay. All right, switching over to currency land. All right, so currency land, let's see. We're sitting here right now. We were sitting right here last week. And again, we mentioned trying to get a pullback. We didn't get a pullback into this level. We didn't get a pullback to the 72.29. It just continued to run away from us. We did get a little bit of a pullback here finally. And again, strong movement down, a pullback, strong movement down, and it pulled back to one of those pullback levels. So this was really the only entry that we had taking it lower. As you guys can see on the 4-hour, we had marked this off as our curve level, right? Was it the highest on the curve? No, we had some kind of pushing around in here. So been a little bit more difficult to trade this one. I do like where we are. Again, there's two levels low. One we've bounced off of this morning. I think my opinion on this one is at 69.89 level down there. I think that's a decent level if we can get a bounce and push down there. I do think the 72.29 is also a good level as far as 4-hour time frames go. We are on the opposite end. So right now, we really got to drop down on hourly and say, hey, listen, what do we got? I mean, again, we're bouncing off hourly levels here, right? Here's price right here at 70.55. We're bouncing off these levels. Can we push up to the 71.36? We got a small level there. I think right now this is kind of what we're working on, is kind of an intraday kind of curve level. And again, that's putting us up to the 71, and then again, bringing us back down, starting this level at approximately 70.26 down to 70.04, right? So again, about a 20 pip zone down there on the bottom side. I think that's what we're working with. Trying to think what could we get in the next 24 to 48 hours. This is a pair that can be influenced by inflation-based data because it is linked with gold. We do have a couple days to go on this one, so I have to say right now, I'd like to see this continue to push higher. Okay. I don't know if it's going to do it this week, but this is kind of what I'm thinking. This is an ideal setup for me. We're in the low, so we're expecting it to go higher. It will kind of kick around. This is actually in the top, 30%. So I could see a small short off of here. I would kind of like price to be here by that manufacturing data on Friday. Couple days away, right? Couple days away. It can grind back and forth with a lack of true economic news this week. If we can get up into this 71.36 by that 9:45 data point on Monday, the manufacturing PMI, and again, it is an inflation-based number, that could be a decent rollover point. Again, 2-hour binary, depending on where we are with knockouts. If we have a knockout with a close ceiling, I think either of those two could be, interesting setups. Again, a couple days, I wouldn't say there's much here that I love right now. If we push back down to this 4-hour level below 70.25, again, that could be it could be a potential long. Again, I don't have my knockouts up right now, but depending on when that is, that could be an interesting one. Again, I say knockout because again, we have 4 days to go through the rest of this week. All right. Looking at Aussie yen. Aussie yen is in a similar position. This one actually we just missed entry. I was looking to get, I was hoping this would push a little bit farther down. I missed entry on this one by 6 pips. Again, 6 pips would have been a spot entry with Nadex. Obviously, you are kind of mixing things around a little bit. There's actually 2 entries I was interested in. That first one there being at 74.09. Again, bottom of the kind of intraday curve. Top is up here at 75.12. I did have another entry down here at 73.44. So I think either of these two can still be potential targets. We're about at your 1 to 3 risk to reward ratio right now. Just missed the entry. I mean, it really went off this bottom level. So Yeah, what are you going to do? But for your curve right now, start looking for sells up here at 75.12, longs back down here at 74.09. If we can break through this level again, another entry up potential is down here at 73.44. Euro pound, this is one of those ones that we kind of had a level here that we said, hey, listen, we have one test, two tests, three tests. It's done pretty well, but then we got front run, and then hit and then pull back. It's kind of like, all right, there's a lot going on here, and then it'll punch it through. So this is one of those ones, had we taken this one as a set and forget, probably would have taken a loss on it. And again, that happens. It was in the middle of the curve. We weren't talking about being, ultra high on this one, right? We were talking about this level being kind of an aggressive entry. Well, now we're at the top, right? We just hit the 4-hour zone up top on this one. So again, what I would say is based off of this level, we should probably be short at this point. Again, high on the curve, looking for potential profit targets. I'd say profit targets down here at 124.61 are decent. I'm going to hold firm on the 4-hour saying, hey, listen, I really like the 122.46. The 124.96 is also decent. It has hit that level before. This is hit number 4. So again, if we start to base too much here, bail on that short. I'd just be cautious because we have a racetrack sitting above it. If we can get some decent movement pushing higher, I'd be cool with that. Friday is going to be a big day for this pair because we have all that manufacturing services data, and a lot of it is showing us that there's going to be German weakness, seeing inflation go in the opposite direction, that they're in trouble. That kind of leads me to believe that this one has the ability to roll over sometime this week. So again, look for your knockouts on this one. Look for potential binaries, when at European Open. As you guys can see, I mean, most of this movement in here has been all European Open, right? This was yesterday's European Open. So it kind of picks a direction from, 3 o'clock in the morning for me and just goes, right? Here's your look. If I go back, right? Here's where we are right now at 12. Here is 3 o'clock in the morning, right here. What did it do? Like, this is your European session, okay? Going back, this is your European session to there, okay? What does it do? European session, European session. The prior, let's see, the prior would have been here, right, to there, European session, okay? The prior would have been here, European session, and that is from 3 o'clock till 8 o'clock. So do you guys see how it is picking a session and staying with it? That's why it's so important to really, again, if you have the ability, not everybody does have the ability to be there for the European session, but look, European session, US session, European session, US session, European session, US session, European session, and then the US session. Okay, so there's a lot of movement based around that. So if you guys can get in there and time those, watch, again, those are the ones to watch out for. For right now, I'd expect a little bit of a pullback, kind of push to the downside. We'll see where we can place ourselves for the next European session-based trade. Pound yen. So pound yen, you guys can see this one is pretty flat. Literally sideways. I'll bring this down to the low time frames. I was talking to my guys. I was like, hey, listen, we're kind of in this no man's land, right? Here is this kind of middle of the curve area. I'd like it to get to the top side or the bottom side. And what has it done? It's gone sideways. We had set up a small kind of intraday trade saying, hey, listen, we love this level. And here you can see there's some whipsaw back and forth. This is a great example of how Nadex is able to protect you better than, say, something like spot currency. Because again, if you had one of these 2-hour binaries or a binary, a daily binary on here, the little spike that kind of whips through the top, guess what? It doesn't affect the binary position. The only thing that matters is where it is at expiration. Look at this. Nice movement down. And again, just to kind of give you guys an example here, right? This movement, let's see, this was a European-based move, so this was all yen-based, right? But you can see some of the big movement in this one. Let me go back to an hourly, right? Here is European session, right here, down to there, okay? Here, European session to 9 o'clock in the morning, okay? Next one it would be here, 3 o'clock, and that goes to 8 o'clock right there, okay? So do you see how once, and again, this was a new spike up at European session, at the break. This is why taking advantage of European session is so important, because it finds a trend and it just goes in that direction, all right? Now, again, we're getting a pullback, and again, this one is already kind of tagged and hit our 3-to-1 risk-reward ratio to the downside. So, again, middle of the curve, I think if we can get back up into the 137.60-ish range, I'd like that. Again, this is just kind of consolidating back and forth, but I think ideally, again, I have alerts. If you're starting this at alerts, I think 138.04 is a nice alert. I think 137.66 is a nice alert. I think 135.30 is a nice alert. right now it's kind of like you're jumping down a small time frame, trying to grab some small intraday plays. And you guys look at the ATR here. Look at this. The ATR is flat. It's back to normal. It's 121. So it's again, it's shrinking kind of in the middle of the range here as far as curves go. All right. So look at the pound dollar, kind of the same idea. You guys can see. Is this flat? I mean, pretty much. I mean, here's where we are right now. This same time yesterday, we were sitting right here. We're in the exact same spot. Our highs getting higher? No. Our lows getting lower? And they did a little bit, but now we're kind of stuck in. Here's our curve that we're working with. So 130.61, 128.29, top and bottom. It's like, come on, can you get us out of there, right? I mean, here's where we were on the 15th, right? 5 days ago, we're in the exact same position. So the trend is just not happening. And if you guys don't know, what the pound dollar is waiting for is Brexit. We're in, we're out, it's hard, it's not hard. We have a trade deal, we don't have a trade deal. Without any concrete Brexit news, they have absolutely no idea what to do with this. I mean, we are literally channeling. Again, look at this. Going back, we've literally been stuck in this same kind of area since the 28th of September. So almost an entire month just bouncing back and forth in the same channel. So 130.61, 128.29 on the bottom. Euro pound. So Euro pound has had a little bit more movement, kind of bouncing back and forth. We had a Harry Potter here. We didn't get triggered on it. It ended up bouncing off the top, so no harm, no foul. 90.16 is a good one that we're looking for. On an hourly basis, we've had some chop. And again, this is an area that we were looking at. It had been broken before and pushed to the brink, so we weren't necessarily as interested in taking this one. It did bounce and kind of push lower once and then got front run here. And again, an area of interest, but nothing, we've really mentioned to say take a long off of. 4-hour-wise, we are in a level. Honestly, for this one, the 92.07, the 92.46, they're both a little bit of ways, about 60 pips. I don't like too much until we get to that level. We're sitting in kind of a 4-hour base level now, but it's kind of a junk candle. I just don't like the way that it was formed. I would be interested. You can see that there's not this. I wouldn't strong movement, but it's just the formation was not good. It spent so much time there. It wasn't something like this. I think a peak like this is much better. But again, that's at 92.07. So really, looking at what we have here, just a wick and another wick and kind of this level, there's not anything clean until 92.07. So I would just hold it. Again, sticking with the curve discussion, I think this is important, top and bottom, and we're kind of right in the middle right now. So nothing really to excite you on this one. Euro dollar. So this is one that, man, we based, we spent all this time in here up. We were at about a 1-to-2 risk to reward ratio. And yeah, just kind of going back on it. So it's one of those trades that most likely would have got stopped out at break even had you been playing this in the spot realm. It just spent so much time there going sideways. It's one of those positions where you would have been having to trail a stop. At this point, we mentioned that we had a gap up here. Again, this is kind of where the Sunday gap was, and 118.20. That's kind of where we're at right now. I would have to say, right now, I'd say looking at a 4-hour basis. Is it the ideal high position in the curve? No. This should actually be there, sorry. Is it at the high? No. I mean, look at this. This is 8 hours, 12 hours of straight down. Absolutely love it. Love the power of this level that came off of. We're not quite there yet. We are in the upper curve area. I am looking for short positions in here, but it's got to be a decent base level. I think 118.58 is a remarkable level. Price hasn't been there, hasn't been tested, but anything that sends us 16-hour or 12 hours straight down with no pullbacks, there had to be some oomph behind that one. All right. So right now I'd be using this area 118.58 to 116.35 is decent levels. If we can punch into either of those two, I think those are good. What I'd like you to do is I'd like you to go check out and see where those knockouts are and how closely they associate with it. Again, remember you're looking for the ceiling up here. So the important thing you've got to be looking for is when we approach, and again, we got some space to go, but we want to make sure that the ceiling is in close proximity to 118.72. Okay, because that will give us our established level of risk. Lower time frame, what can we do with it during the day right now? Not much, right? You're seeing on an hourly basis. We got a couple levels up here, but those levels are the exact levels that I just pointed out on the 4-hour. So use them to draw them on the 4-hour. That's going to be the best place to do that right now. Okay, so these are just basically the channel that we were talking about. Okay. Yeah. So again, set your lows for 118.58. $CAD. So dollar CAD, as you guys can see, there's a position that we had here. And for last week, we were sitting, let's see, right here on the 13th, we were sitting right here, right? We had 132.36 as an area and kind of this kind of basing level here. It ended up taking a ding off that one and dropping back lower. So had you taken that short from last week's market analysis session, you were fine. It went all the way back to the opposing level down here at 113.11. We have kind of gotten all the way down there right now. I want to see if we can get some dollar strength to pop back into this market and kind of roll back over. But when I did the analysis and when I put the coloring on would have been here yesterday. And I said, listen, here's the curve. And again, perfect example. Here's the curve. When it's sitting in that middle 33%, we're really looking for it to go to one of the extremes being 132.43 or 111.11. I'm sorry, 131.11. We've pushed all the way back down. We've hit it. And again, we're kind of getting in a parabolic move to the top side. So I do think that there's an interesting long in this one. It does kind of, I wish it didn't end up crashing into that level at noon. I would have preferred if it had done that early morning so we can get more of an oomph, more, volume and more trading into it. But again, we should start seeing, 1 o'clock in the afternoon, we start seeing some more dollar movement again as traders are coming back from lunch. So I do think that there's probably an interesting trade setup to this one to the top side. A couple different ways to play that one. Based on the timing, I would also be a little bit cautious with the 2 hours at this point, right? Because again, you're talking about from 1 to 3, not as much volume as early morning. Again, end of day is probably better than the next 2 to 3 hours, but it could give us a potential kind of rally back to the top side. Okay, dollar Swiss. This is one of those pairs that I have such a love-hate relationship. There are some days that I'm like, I love this pair. There are other days that not so much. So I was looking for some type of a confirmation entry bounce long, and we never got it. And it ended up kind of coming through and just kind of melting through the level. So I never got my long entry here that I was looking for. It did kind of go right below and didn't really give us a Harry Potter. It did kind of base through, though, and the basing is things that I do like to see, right? At this point from this level, and again, let me kind of draw this one. We're still at that bottom end of the curve, so I kind of hesitate because there are some levels below. But if I reverse this the other direction, again, you can see that this did actually kind of meet more what we were looking for Harry Potter. Typically, we like to see the base a little bit closer, but right now I have to say that this one is probably set up for a short in the next probably, 6 hours or so to the downside, okay? It'd be looking like this. And again, remember, sometimes your analysis is not going to be correct. I was looking for a specific pattern. I did not get the specific pattern that I wanted, so it never gave an entry. But when a zone fails and when we base in a zone, the first thing, again, for those of you that follow and know what those Harry Potter setups are, you should be looking for a reversal, right? It broke through the level, it came down, it came back up. His basing has tagged a level, and again, we're looking for more of a short to the downside. So we're in there right now, not much else we can do with that one. On an hourly basis, again, curve, this should be here under the green. That's kind of what we're working with right now as far as what we got, right? I do think there will be a retracement here, and I would actually watch this level. This is high in the curve again, but I do think 91.54 is an area that you got to keep on your radar for potential shorts and rollovers because that was such strong movement off. Got to be into that one. Okay, dollar yen. This one's just grinding. We're kind of in the middle. Like I said, we had some a Harry Potter on a break here. We're kind of looking for additional shorts. We're kind of in a 4-hour level right now, and it's just bouncing around sideways. 105.96 is a great area for me that I'm looking at. 105.01, again, if we can come back down here and tag it. I think either of those two is great. We're middle of the curve right now on the hourly, actually on the 4-hour as well. So again, consolidation is just kind of just stuck, right? Also, this one has a 43 pip ATR right now, right? 43 pips. It has the smallest ATR of all the major currency pairs right now, which means it's not moving as much, which also means it doesn't provide as much opportunity for us. Ways, though, that you can play the smaller opportunity, 43 pips, what you can do in those situations is you can go down to the lower binaries, okay? The reason why is because the strike differential is not as far away. One thing, and again, I don't talk about this as much, for those of you out there that are looking at 5-minute binaries, the dollar yen, because it is not moving as much, it's staying in kind of smaller areas, and you can see small trend, small trend, small trend, small trend, small trends. And again, I'll drop this down to a 30 minutes. You can see, and actually I'll drop it down to even a 5-minute. You can see it tends to stay in kind of consistent patterns, right? Bunch up, bunch down, bunch up, bunch down. And again, this was kind of the middle of the night. This is our early morning, right? This is kind of the dead time. And then again, strong movement up, strong movement. It tends to keep 5-minute candles that are pretty decent as long as you're at the high, when I say high volatility times, I mean like first hour and a half of the open, right? From here to here, you're talking about great movement, right? This is this is when people get back from lunch. So it is one of those pairs that is a decent 5-minute binary pair to trade, okay? Should we be trading this one for weeklies right now? No, because this is what it looks like, right? It's just not giving us enough movement on a daily basis, but it is giving us enough movement down into some of these 1-minute candles here. If I get this to resize quickly, you can see that this is pretty decent movement. This is a minute chart, right? So 1, 2, 3, 4, 5, going from here down to there. That's pretty decent, right? You're talking about what, 5 pips in that time frame? A pip a second. And again, on the 5 minutes, you can set some things up in there. All right. All right. Let's go across and look at gold. So gold has been a little choppy, right? So we had one level last week. We're sitting here right now. Last week we were sitting right in this level right here, and we just talked about we had this major crash down, right? Major crash down, and we were looking for reversals. We were looking for more of a conservative entry in this one down to 1878. We didn't get it. It rallied back up. It came almost all the way back up to the 1922. Again, an area that we mentioned would be great for a rollover, but really all we're getting is consolidation. This one will move much later in the week when we start getting all that PMI data because, again, that is inflation-based. So keep that on your radar. Right now, I'd say, let's hold firm, 1921, 1878 to the downside. There has been small intraday kind of moves in this one. Looking at here, I would say if we can time this correctly, again, with a kind of morning news time, I think 1915 gives us a potential short, right? There's a potential short in there. And then again, this level, probably not so much. But I would say that there's probably, again, depending on time, 1891 is probably another decent level. All right, kind of giving us a small kind of intraday trader kind of curve right there. Okay, silver. Yeah, silver's in the top. Okay, so we've had a short entry here. It's kind of rolled over on us. Last week we were sitting, let's make sure our time is right here. Yeah, so we were sitting right here last week. Okay, we ended up getting the bounce that we talked about. We were looking for price to come back up to the 124.97, and that was kind of the bottom of this, and actually we should have been a little bit lower, but should have actually been right here because we wanted it off the top of this red body. You can see we ended up getting that entry, and it kind of collapsed back down again. I would say that silver is doing a little bit better now than gold was. Before, gold was giving more opportunity. I would say that silver is giving us a little bit more right now. I do like the 25.35 as a potential short level. I think that's decent. I think we should. 25.06 is probably an area as well I'd be looking to get short, depending on the time of day that we hit it. That would be based off of this green box. I would say overall silver, though, I am bearish. I will say with gold and silver, one thing that I am cautious about in any bearish position is the fact that there's that looming stimulus thing out there still, right? If we get word that, yes, the stimulus is approved, both of these will bounce. Okay, more money means that, yeah, there will be more inflation, and again, you will see bounces. So that's the only thing that keeps me cautious on the bearish side of this, but I do think both those levels on a purely technical base level, both those are decent to the downside. All right. Last but not least, let us pull up oil. So we are sitting right here right now. We just pushed up into that level. Here's where we were sitting last week, and I said, okay, listen, we got 2 levels to watch out for. We had the one to the downside, which again, we had gotten a confirmation entry. We'd marked that up on green, and we'd also marked this level up top, this 41.24. Well, we ended up triggering. Now, this is what I was looking for, and this is the exact scenario that I explained when I said, hey, listen, oil inventory report is coming out. If tomorrow morning for the oil inventory report, if we can be back into that level, I think it would be a great short entry. Well, Thursday was over here, right? So it did exactly what I said it was going to do. I just missed the actual day of the inventory release. It punched all the way back down and also dropped back down to that lower level, back down here at 39.25. Since that time, we've been front run a few times. This morning, we ended up hitting that level again and punching back lower. And again, it went back into an area where we saw buyers. I'd have to say right now, oil is being pretty resilient in its kind of pushes higher. Where we are now, we've hit this level a number of different times now. It's given us a number of different entries. I mean, you can see over here in this one, we had a touch here, we had a touch here, we had a touch here. Got front run just barely here. We touched it here, punched it back down. And now we're finally driving deep into this level. Although I would have to say it is still an area where I think there could be some selling. At this point, I think I'm starting to shift my trade entries just a bit higher based off of these two greens, right? And these two greens are coming off of really kind of this level of basing here, this wick over wick, where we hit and dropped, hit and dropped, hit and dropped. We haven't made another attempt into that level yet. Okay, so, whoops, I was using this just to stay where we were last week. Although it has been hit, although it got pushed deeply, we haven't tested it for a while, and that level's kind of kicking in over here at 41.65. So it's kind of an area where I'd say, hey, listen, if we could be there tomorrow morning before the oil inventory report, I do think there could be some potential shorts out of there. Right now, today, like I said, there was the early morning entry. Again, this is a 30-minute one, so this would have been, like 4 hours ago, or 6 hours ago that this one would have kicked in. Then obviously, since this morning, it's just done nothing but rally up. I would say that I ain't bearish this position. I'm looking to get bearish this position. And again, I think, let me check very, very fast here because I don't want to go too late today. I want to make sure that we're out and our timing is good right now. Let me log into Nadex real fast. I want to see where the knockouts are for this one. Let's see. Hold on one sec. Let me shrink this. I want to see where the knockouts are for this because I was looking at this the other day and the knockouts are a little bit far from me, but I think that the top ones are a little bit better. Commodity, crude oil. Yeah, the knockouts this week are flat on the dollar. They're double zeros, okay? So my only concern about this one is we have a knockout that sits right, what do we got? We got 42 is the next closest one. So this right here is the next knockout position, okay? And the question is, in this range, if we can get up into here, is it a valid entry? My only concern using a knockout on this one for this week, last week they're different. For this week is, this is what our level of risk would be on this one. You'd have to take this as kind of your level of risk, okay? And then the question is, if it needs to move at least 3, can it move back into that range? Answer is probably it can. Timing the top of this one with a knockout may be a little bit harder. I think the way to play this one, here's I think that the two ideal options of this one is going to be to play this one with a 2-hour binary. If we are in these two levels, somewhere up in this range for oil inventory, shooting for a 2-hour binary, maybe a 10 to 12, or waiting for the initial response from oil when it comes out at 10:30, and then entering the 11 to 1 2-hour binary. Okay, I think that's going to be an ideal way to take this. And again, it could roll over now and be away from this area, in which case, again, some of the analysis changed. We want to see what it does from now till then. But I think what's going to be the best bet for you guys tomorrow is look to see where we are, look to see if we're in either of these two levels before the release. If not, if we've rolled over, look to see some of these bottom levels. Can we push all the way down here? Man, I'd love that, right? But we may want to actually wait and see what the actual oil inventory report is. Wait for the initial response, and then play the reverse to it inside of a 2-hour binary to keep our risk and our strike differential lower. All right, so that's probably how I'd be looking to play that one tomorrow. All right, so with that said, mark your calendars. Make sure you guys mark it off for October 27th next week at the same time. I do see there are some questions up there. Somebody asked what a Harry Potter trade was. He was obviously new and wasn't accustomed to what that one was. But if you guys do have any other questions that I did not answer, you're more than welcome to shoot me emails about that one. Support at keeptradingsimple.com. With that said, I will catch you guys next week. Good trading. And again, make sure you guys look at those lower duration binaries. They are absolutely my favorite. You guys take care and have a good one.